Good morning, traders. We're back. Daily market analytics, Wednesday morning, and we got a new position alert. I've just pulled the trigger here on a new position on the dollar versus the Swiss franc. I'm talking about a short position, and I want to show you all the details regarding the technical situation. But before I'm going to do that, before I'm going to go about that, I want to give you a little bit of my reservations when it comes to this particular situation and trading opportunity. It's a bit of a risky move. Let's just say riskier than usual, mostly because we're working with less than ideal setup, right? The fact of the matter is, we're working with this particular formation, and we only have here two legs in this trading range, right? So it is considered to be a weak setup, having only two legs. It's probably too soon. Having said that, I have to say the nature of the move of the second leg was very impressive. I mean, take a look. Price shoot itself straight to the top resistance, 102.25. Really nice touchdown here. Taking the previous high, turning around, and now breaking below the test level of 100.30. Right? That was, I was following up on this move here on the downside. And I kept in mind that if price is going to break through that 0030 and have that weekly confirmation backing it up, I might get involved, even though it is a weak setup, right? But I want to show you one more interesting element that I found on the 4-hour chart and the daily chart, actually, which convinced me that this actually could be a successful move. So first, you can see that price, when it was on the upside, it went straight and touched base here just yesterday on this brown dotted line. Now this brown dotted line represents the Fibonacci correction 38.2 of the previous downside move, right? This one. So price just checked that 38.2, and if you take a look at the 4-hour chart, here it becomes actually even more interesting. We see a typical ABC correction. Just a classic ABC correction, right? But here's the punchline. Let's just measure, wave A against wave C, and as you can see, guys, they're they have equal length, they equal to one another, which means that this could be the end of this technical correction. That's what it means usually. It just, boosts the potential, boosts the probability of, a downside reversal at this point. And we obviously, we connect that to the bigger picture, which supports that, that particular move. I should say this, I expect price to come back down by the end of the week, right? So it needs to cover about 35 pip from where we're trading right now, which is basically nothing. It can easily do that in one day, and it's had 3 days to do that, right? So it's important the price will come back now on the downside. It has to continue straight up, straight down, just continue from this point and close the, the distance to 10030, eventually closing the week back below, leaving just a spike here. So this is pretty much what I would expect to see, and that's my main condition in carry on with this position. And obviously I would like to increase the position. I started small here, kind of testing the water. I want to make sure that my expectations are going to be met. So we're starting with stop loss level relatively loose at 102 spot, right? And it should be really interesting to see how things are going to unfold here. Hopefully we'll come back to follow up and keep you posted. That's about this. That's about that for this one, guys. Dollar Swiss franc looking pretty good right now on the downside. See you in the next video.